With me in the studio, I'm Jonathan Friedman. Welcome back to Radio Entrepreneurs. Richard Greene from Panther Investment Properties. How are you, Richard?
I'm very well, Jonathan. Thanks for having me again. It's a pleasure to be here.
It's always a pleasure to have you. It's a pleasure to be here with you.
Thank you.
So, what's going on in the world of real estate investment?
Well, real estate continues to be sort of one of those asset classes that is looking more and more attractive. Sort of it's in the land of the blind, the one-eyed is king. We've had some issues in the bond market recently, a lot of volatility in the stock market, but real estate has continued its sort of strong performance and creating value, and therefore what happens when that happens is money finds a way into that asset class. So single-family homes, recently sales of homes dipped a little bit, but generally it's been on an uptrend.
And is that both new and existing? I heard the other day a story about existing homes.
It was
sales.
primarily existing. Well, it's interesting. A lot of it has to do with consumer confidence, and a lot of it has to do with household net worth. So we had a fairly rough January in the stock market, where we were down 11% at one point in the S&P. So when people feel a little bit less wealthy, they put their things on the back burner. Plus, also, again, even though we've had a mild winter, we're not really in the prime home buying season until the spring, at least in the Northeast and several parts of the country there.
So that's not a seasonally adjusted dip, though. It's
right.
Year over year.
Yes, yes. Jonathan, one of the criteria that we think that was put into place for the benefit of protecting consumers and institutions has been in the need for increased credit quality. And last March, there were sort of additional upticks in terms of the minimum FICO score and the minimum sort of credit quality scores that a lender wanted to see. And sometimes at the margin, that can, you combine that with, so you need higher credit quality, but you see higher prices too because of the strength in the market.
Right.
So that doesn't necessarily
so some people out
work.
Yes, on the cusp.
Between both ends, between both criteria as far as that, both metrics. So, we're focused primarily at Panther on multifamily properties. We focus primarily in the Southeast, but in generally, you look at what what rents have done in certainly the major metro areas. They've escalated to the point where there's a fair amount of actually sort of governmental concern that their affordable housing is becoming less and less affordable.